If you're branching out into the world of investing, no doubt you'll have seen a ton of headlines about the latest and greatest initial public offering, or IPO, to hit the market. So if you want to know what an IPO is, why companies list them, and what they mean for you as an investor, this video will explain all of that and more, although mostly just that. Great ideas don't turn into billion-pound businesses overnight. In fact, many don't even make it close. To raise equity, companies have to go through several phases of funding, from using their personal savings to sourcing private investors. An IPO then can be thought of as the final stages of funding, and is the process by which a private company goes public by selling its shares on the stock market for the first time. Private companies hold IPOs to raise money, and they do this for a number of reasons, including to help their businesses grow and expand into new markets, to launch new products, to hire more staff, to help take their business overseas, to invest in new infrastructure and technology systems, and to pay back early investors. Another benefit to listing an IPO is the publicity that comes with it. Lesser-known companies can take advantage of the media hype, as well as the prestige of being a publicly listed company, to help generate new business opportunities. Plus, when you trade on the London or New York stock exchanges for the first time, you get to ring what's known as the opening bell. Technically, it's just a big old button these days, but as if you needed any more incentive to get your company up to an IPO. Unfortunately, if you're an individual investor, it can be hard to get your hands on the latest IPO shares, particularly if a company is well known. This is because where a company has a limited amount of stock to offer, they want to prioritise large institutional investors like other businesses and investment banks, as well as high net worth investors with large portfolios and an annual income of at least a few £100,000. So retail and non-institutional investors, that includes you and me, can get access to an IPO if demand is lower than expected, but you'll need to be signed up to a broker to be invited to take part in the IPO. But don't worry, even if you're not earning stacks on stacks on stacks, that doesn't mean you can't invest in the company eventually. After the initial public offering, shares are then officially traded on the public exchange in a kind of second release, and anyone with a share trading account can get their hands on them. Every year brings with it another exciting batch of IPOs from big brands and daring new contenders. So to keep track of the companies rumoured to be considering an IPO, or those that have filed or recently completed one, check out our IPO tracker on finder.com/UK. Links are in the description below. Stay tuned for our next video, or hit the subscribe button for more videos like this one. Thanks for watching.